It's been a remarkable week for Argentina. Over $7 billion in agricultural sales in less than 3 days, raising big questions for global demand and U.S. exports. We'll also dive into the USDA's latest stocks report, the risk of a government shutdown, and whether there's anything left to keep markets bullish. I'm Johanna Bota, and here to break it all down is StoneX's VP of Clearing and Execution Sales, Bertrand Oesterle. Welcome, Bertrand. Nice to have you with us.
Morning.
So, $7 billion worth of grain in just under 3 days. Did the markets expect this consumer rush?
So we knew that the solution from Argentina was to get it done by the 31st of October. It seems that, to be frank, the market did not expect it to be this quick. I mean, less than 3 days to get to that amount of reserves for the central bank. That's a result for the Argentine government from that point of view. Now, it's been so quick that it put into focus demand. For quite some time, the market was saying there's no demand, there's no consumer interest. Well, this measure from Argentina just showed that when prices go lower, consumers do turn up, and it's all about the old game show, The Price is Right.
Yes.
So it was a bit of a shock in a sense, but also it's how and who bought all that grains and oilseeds. So we heard that China bought some 2.4 million tons of Argentine soybean. We heard, for example, that India came to benefit from the lower price because the tax was not there by buying some 300,000 tons of soybean oil. And it puts everything in perspective from an American point of view, from a US point of view, because if China buys Argentine, it again bodes pretty ill for the chances of the US selling to China. It shortens that window of September to January once again. And that's at a time when the Ministry of Finance from China is saying that if the US want to have a chance, they need to remove the tariffs.
Yeah.
So overall, again, a pretty disastrous result for US exporters in soybean. And that's at a time when we've got already the exports from the US, which are 19% behind the pace required to get to the annual figure. Now, when we look at the bonanza from the consumers in those 3 days, the big question mark, which is somehow difficult for us to assess at this stage, is this just displacement of origin? Is it like a musical chair of origin?
Right.
Or is it consumers buying now and having much less to buy later in the season? So that is something we're going to have to try to guess.
Yeah.
Now, from a futures point of view, what we've seen is that consumers are present, and we've seen mostly feed compounders being present in Europe, especially Southern European ones, where they've been buying the December wheat and the March wheat contracts in Paris milling wheat, for example. But we've also seen, and we've seen it for quite some time now, from June up to now, we've seen some very regular North African feed compounder buying on Chicago soybean meal, corn, and soybean.
I see. So yesterday we got the USDA's quarterly stock reports and the wheat output reports. How did markets react, and what's your personal take on those figures?
So the bottom line is that report was bearish.
Okay.
So the market fell just after that report came in. But the figures, the reaction to those figures has been very mixed. So if I try to break it down, if we look at corn, the September 1st stock figures for the US corn were at 1.532 billion bushels. That's down from 1.763 last year. So that can be explained. We have less stocks than last year because we've had a good export pace. It's 5% above the rate that we need to be at in order to get to the USDA figure.
Okay.
We also had a lot of noise over the past few months of good US domestic ethanol demand. But when we look at the figure 1.532 against 1.337 that was expected, why are we higher? If we're exporting more, if we are consuming more in the US, then why is that figure higher? So some people started to comment saying that maybe the USDA had anticipated some of the harvest progress into that figure. In a way, it doesn't make sense because it's the September 1st stocks. So at that time, the harvest wasn't started. But by the time the report came out on the 30th of September, 18% of the harvest is done. So maybe some harvest element was in those figures already. Then when we look at wheat, the stock figures came in at 2.12 billion bushels. That's again higher than the estimates, higher than the figure last year. In a way, it could be explained by the fact that wheat has just been harvested, so it would be anticipated that we've got more stocks. But some argued that maybe that figure should not have been that high because the exports out of the US are already 7% ahead of the figure required to get to the USDA annual figure. And then in soybean, we had a September 1st stock figure at 316 million bushels. That was below the 323 expected, down from 342 last year. And in a way, people also questioned how that figure came about, in the sense that the US exports are 19% below the pace required to get to the annual figure. The only explanation would be that we have lower stocks because it's such a huge biodiesel demand in the US. But we haven't had that evidence just yet because we've had questions from the EPA recently, but no answer. So it is surprising that with exports to China being inexistent, that those stocks were lower. But the bottom line is, the report came in, was bearish corn, bearish wheat. It spilled over into soybean. It was bearish overall. So when Chicago came off, Paris came off as well. And for example, December Paris wheat made a low of 186 yesterday. That was 4.7% decline in September alone. And this morning, as I came in, we continued the downside. We made a new contract low of 185 as I walked in.
Okay. So as I'm sure you know, the US government just shut down for the first time in 6 years. How is that shutdown going to affect grains and oilseeds?
So for me, there's two elements to watch out for. First of all, Trump's been talking about the past 2 weeks or so to move some tariff money to farmers. So the tariffs that US consumers have been paying, that pot of money could be used to help farmers. If there's no administration, how can it be implemented? How can it be decided upon? So that could be something that could get put on the side. And then there may be no WASD, no USDA report for a few months. So that is interesting because the market has been reacting very differently to how the USDA could be absent. Some people have thought that if the USDA is absent, it means that there's no update on consumption at a time when we know that the harvest in corn and soybean is ongoing. So people are saying it could be bearish because you have no demand. No demand data when we know that the harvest is pressurizing. Others have said that there's maybe a bullish element that would be missing, in the sense that the market is generally expecting that the WASD reports from September all the way to January are likely to reduce the corn and soybean yields. If the USDA is not there to provide that reduction, there's that bullish element that could potentially be missing. And then there's a third group of clients who basically said, good riddance. If the WASD is not present, if the USDA is not present, then there's no bearishness from the USDA, because since Trump came in power, the USDA reports have only been bearish.
Right. So that's a lot of actual bearish elements then. What remains bullish, if anything at all?
So there's still plenty of elements that could be bullish. So yes, we've gone down and down and down and down, but there's still some elements that the market is watching out for. If I start with Russia, we know that the Russian-Ukrainian war is nowhere near ending. The Ukrainians have hit Novorossiysk, the main port on the Black Sea, from Russia twice over the past 10 days. It did not affect the grain capabilities in terms of export, but if it did hit a grain terminal, it could have a significant impact. More specifically about Russia, we've had a rising ruble. We've had the finance ministry saying that for next year they are looking at increasing export taxes by twice as much. The export taxes at present are low compared to the recent highs of previous years, but they've been increasing, and people have been mentioning that more and more. So what does it mean? It means that the FOB prices from Russia are getting higher, and that's a time when we also hear from Russia that there's some dryness in places, and there's also an issue for farmers to secure cheap fuel to plant, because the fuel is going to the army first, not to farmers.
Right.
Also, we have to take into consideration weather, and on the weather front, there's quite a few elements we need to continue to watch out for. First of all, La Nina. La Nina for the moment is a question mark. There's some reports saying that it's a 55% likelihood of it occurring. It's a low percentage. Then there's always two elements to La Nina: the percentage of likely occurrence and then the intensity. The intensity is always very difficult to assess. But at present, we start the season with a South American crop estimate, which is really high, and La Nina could come to challenge those estimates at some point. So we're going to have to watch that out at least until March.
Okay.
When we look at what we know right now, the Brazilians are about a third planted for their first corn crop. It's very quick. The soybean crop is starting to be planted. It's 5% planted so far. It's in advance compared to last year, 0.5%. And when we look at Argentina, there's a switch from soybean into corn. And the corn estimates are high, 58 to 61 million tons compared to about 50 last year. So those figures could get challenged.
Okay.
As we mentioned last week, the potential bullish element also could be talk of dryness in various parts of the world. So we still have the dryness in winter wheat areas of the US. We still have dryness in Turkey, dryness in part of southern Russia. So we are about to enter the winter, so that story may dissipate, but for the moment it could still be a headline. And then from a political point of view, there's also the relationship between China and the US that we would need to monitor, but there's also Canada-China. If Canada and China get to an agreement on canola could rally. It could, by spillover support, provide a hike in rapeseed.
Okay, now I'm going to ask you to put your neck out on the line. What do you think is going to happen next?
So it's been quite challenging. When we look at the trend is definitely down. I mean, we've been down for 6, 7, 8 months now, and since Trump has been in power, it's just been a downward trend. For quite some time, I've been trying to mention that there may be a bounce for XYZ reason, and each time that bounce has never taken the length that we were hoping for. So when you ask me to put my neck on the line under the guillotine, maybe I'll lose my head.
No.
But basically, I think that when we look at the technicals are interesting. We're getting to a point where the market is very low. And if we look at Paris wheat December, we hit 185. The RSI is just 30%. So we're getting into oversold territory. Chicago wheat is about 36% RSI, so it's not yet into that oversold territory. But we're getting into a period of time where people are talking about seasonality. And the seasonality may be the element that's going to provide a longer term bounce, but we're going to have to see what lengths we get into that bounce. And all will depend on whether or not consumers accompany that seasonality. The price was right with the Argentine story. It's not the right price for farmers. It's not the right price for merchants, but we're going to have to monitor whether or not we get that seasonality.
Bertrand, thank you so much for your time. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.